Hello, I'm Hickey from interest.co.nz and welcome to a special economic weather report brought to you in association with the Bank of New Zealand from here at the Reserve Bank in Wellington, where I just sat through the lockup for the September quarter monetary policy statement and the official cash rate decision by New Zealand's central bank, and also a press conference with the Reserve Bank Governor Alan Bullard, in which he announced that the official cash rate would remain on hold at 3%. Remember, we've had a couple of increases the last couple of monetary policy meetings, and now the Reserve Bank has said the economy is slowing down, not just here but overseas, and that the effects of high debt, particularly in the household sector, mean that low interest rates are not having the same impact on the economy as he'd previously expected. Now that means that the Reserve Bank's forecast for the 90-day bank bill rate has been lowered significantly between the June monetary policy statement and the September statement. Back in June, the Reserve Bank was expecting the 90-day bank bill rate, which is just slightly above the official cash rate, to rise to 6.1% from under 3% at that stage. So a good 300 basis point increase. But now the Reserve Bank is seeing the 90-day bank bill rate rising to 4.7% by early 2013. So there's actually been a halving of the interest rate increase track that the Reserve Bank is seeing. Now the Reserve Bank also looked at the impact of the Christchurch earthquake on the New Zealand economy. In line with what Treasury is saying pretty much, it said we'll see a slight reduction in GDP in the September quarter before increases in the following 2 to 3 quarters as reconstruction spending goes through the economy. But Alan Bullard did point out in the press conference that he had actually made his decision to put interest rates on hold before the earthquake actually happened. So it's not likely to be a factor in the Reserve Bank's thinking. Also in the press conference, the Reserve Bank Governor talked about the impact of debt on how consumers and businesses and farmers are spending. He noted that people are being a lot more cautious about their spending and that banks are being cautious. He says he's also keeping an eye on what's happening in the rest of the world as central banks look to try and battle a very slow recovery from the worst financial crisis we've seen since the 1930s. So there we have it. The Reserve Bank has held the official cash rate at 3% and has lowered its forecast track for interest rates over the next couple of years. What does that mean for mortgage rates and term deposit rates? Well, term deposit rates are already a couple of percentage points above the official cash rate, quite unusual, as banks are keen to get hold of term deposits to meet their requirements under the core funding ratio. This is the rule the Reserve Bank has, which says banks need to keep at least 65% of their funding from local or long-term sources. And from the mortgage point of view, we've seen longer-term fixed mortgage rates edge down in the last couple of months, and we've seen the floating mortgage rates edge up. Now what this means, this announcement from the Reserve Bank, is that the longer-term track for interest rates is not as high as the Reserve Bank was thinking. Now the markets have already priced some of this in, but obviously it means that those people on floating mortgage rates who were thinking, going from the Reserve Bank's previous forecast, that the floating mortgage rate could rise to 8.5–9%, we're now likely to see that more towards the 7–7.5% era. Now that is good news for those people on floating mortgages. Those people on fixed mortgages, it's now a much tighter call between fixed and floating, particularly now that the outlook for interest rates rising fast is not quite so strong. And the Reserve Bank pointed out today that people are staying pretty much on that floating rate when they roll over their mortgages rather than going to fixing at the moment, simply because floating is just that teeny bit cheaper than most fixed rates. I'm Hickey. That was a special economic weather report brought to you here from the Reserve Bank in Wellington after the official cash rate decision.